What if you could turn $100,000 into $1.8 million without ever lifting a finger again? Sounds too good to be true, right? Well, it's not. Today we're diving into a proven investment strategy that could transform your financial future and even create a legacy for generations to come. I'll reveal how one powerful ETF, SCHD, can help you build wealth, achieve financial freedom, and protect your investments through market ups and downs. We'll break down SCHD's secret formula for success, its track record, dividend growth, and the incredible power of compounding. But that's not all. We'll also cover the risks you need to know and help you decide if this strategy fits your unique financial goals. If you're a fan of this channel, you already know we're big believers in SCHD, so don't miss out on what we're about to share. We'll dive into its past performance and what kind of results you can realistically expect over time. Stick around until the end because you'll not only learn how to make your money work harder, but you'll discover a game plan to unlock your financial potential. Let's get started. Let's see how that $100,000 can grow into something extraordinary. Chapter 1. What makes SCHD stand out? What exactly is SCHD? And why should you pay attention? SCHD stands for the Schwab U.S. Dividend Equity ETF. This fund is built to give investors access to some of the most dependable dividend-paying companies in America. It tracks the Dow Jones U.S. Dividend 100 Index, ensuring it doesn't just pick any stock that pays a dividend. SCHD focuses on companies with at least a decade of consistent dividend growth, a market cap of $500 million or more, and strong financial health. Why does this matter? Because not all dividend ETFs are created equally. Some funds chase high yields without considering the company's stability, but SCHD strikes a smart balance. It prioritizes financially solid companies that are likely to sustain or even grow their payouts. While other ETFs may offer higher returns up front, but with greater risk, SCHD provides both dependable income now and potential growth for the future. It's the perfect combination of steady dividends today and long-term capital appreciation tomorrow. Chapter 2. SCHD's track record. The numbers that matter. Let's talk results. Because in the world of investing, performance is what counts. SCHD has consistently delivered solid returns across different timeframes, making it a reliable choice for those with a long-term vision. Over the last year, SCHD returned about 6.65%. At the 3-year mark, it posted a modest 1.81% gain. But look at the bigger picture. Over 5 years, the return soared to 44.7%. And if you had invested 10 years ago, your annual growth rate would be an impressive 10.12%. How does SCHD measure up against the heavyweight S&P 500? While the S&P 500 is often seen as the ultimate benchmark, SCHD holds its own thanks to its dividend-focused approach. It might not always outpace the S&P 500 during bull markets, but where SCHD shines is in tougher times. Take the market correction of 2020, for instance. While the broader market took a significant hit, SCHD's decline was a much smaller 6.5%. This ability to weather downturns is why so many investors see SCHD as a foundational part of their portfolio. SCHD doesn't just aim for growth, it's built to absorb the shocks of market turbulence. By concentrating on financially strong companies with proven dividend histories, SCHD delivers not only steady income, but also peace of mind. Its blend of stability and resilience makes it a smart choice for anyone aiming to invest with confidence no matter the market's ups and downs. Chapter 3. The power of dividend growth. Let's talk dividends, because who doesn't love earning money simply by holding an investment? Right now, SCHD boasts a dividend yield of about 3.66%, which stands out among many ETFs. But the real magic lies in its consistent dividend growth. Over the last decade, SCHD has steadily increased its payouts with an average annual growth rate of roughly 11%. Here's what it means for you. If you invested $100,000, you wouldn't just enjoy a steady income stream, you'd see that income grow over time, helping you keep up with inflation and boosting your overall returns. Now, here's where things get exciting. Reinvesting those dividends Instead of pocketing the cash, reinvest it into more shares of SCHD. What happens next? Those additional shares generate even more dividends, creating a compounding effect. Think of it like a snowball rolling downhill. Each turn adds more and more snow, making it bigger and stronger. Over the years, this compounding can transform a solid investment into a truly remarkable one. With SCHD, you're not just earning reliable income. Thanks to its proven track record of dividend growth, your income has the potential to rise every year, especially when you reinvest those payouts. It's a strategy that combines stability with long-term growth, making SCHD an outstanding choice for building wealth over time. The impact of putting $100,000 into SCHD. What could happen if you invested $100,000 in SCHD today? Let's break it down, because this is where the real power of investing shines over time. Start with the 10-year mark. Based on SCHD's historical average annual return of 10.12%, your $100,000 could grow to about $260,000. That's more than double your initial investment in a decade, largely thanks to reinvested dividends and the magic of compounding. But what if you're thinking even further ahead? Fast forward 20 years, and that same $100,000 could potentially grow to around $680,000. This is where compounding really takes off. Your earnings begin earning their own returns. Now, here's where it gets truly impressive. If you're in it for the ultra long term, 30 years, your $100,000 investment could expand into a staggering $1.8 million. And this isn't just a hypothetical scenario. These figures are grounded in historical data and SCHD's consistent track record. While no one can guarantee future performance, the past results give strong reasons to consider SCHD as a core part of your investment strategy. The secret lies in patience and reinvesting dividends. By rolling those payments back into buying more shares, you create a cycle that amplifies your returns. Each reinvestment generates more dividends, which then buy even more shares. In simple terms, investing $100,000 in SCHD isn't just about where you start. It's about where your money can go. The longer you hold on, the greater the potential rewards. Whether you're planning for 10, 20, or 30 years down the road, SCHD could be a powerful tool to help you achieve your financial dreams. Chapter 5: Risks and Things to Keep in Mind. While SCHD is a strong investment choice, it's essential to remember that every investment carries some level of risk. One potential concern is market volatility. Although SCHD tends to be steadier than individual stocks, it's still affected by the market's highs and lows. Another factor to watch is sector concentration. While SCHD is diversified across various industries, it may lean more heavily on certain sectors. Economic conditions, such as changes in interest rates or inflation, can also influence SCHD's performance. That's why diversification is key. Even with a reliable ETF like SCHD, spreading your investments across multiple asset types can help protect your portfolio from being overly impacted by any single sector or economic shift. SCHD is a great tool for building wealth, but it works best when combined with other investments to create a balanced and resilient portfolio. Chapter 6: Is SCHD the right fit for you? To wrap things up, SCHD offers an attractive combination of growth, stability, and steady income through dividends. Its solid track record and balanced approach make it a fantastic option for long-term investors. However, your financial journey is unique. It's important to evaluate your goals, timeline, and tolerance for risk before deciding if SCHD aligns with your strategy. Remember, investing isn't a one-size-fits-all game, so take the time to make an informed choice. If you found this breakdown valuable, be sure to hit that like button. Don't forget to subscribe for more insights like this, and please feel free to share your thoughts or questions in the comments. I'd love to hear from you. Thanks for tuning in. Here's to making every step on your financial journey count. Profitable investing